This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago, and we're looking at the grain markets. A little bit of profit taking, I think, ahead of tomorrow's USDA report. Corn, soybeans, wheat all trending a little bit lower during today's session, but I think it's still relatively healthy. Looking at some of the technicals going into that report, for December corn, 379 to 382 is a big pocket that we're keeping an eye on. This represents a key retracement on the year, the 50-day moving average, as well as previously important price points back in June, July, and now August. So long as they can maintain price action above this, I think they remain in control. Now on the resistance side of things, 389 3/4 is the line in the sand. They want to see consecutive closes out above. If they can do this, I think that encourages additional short covering. That 389 3/4 level represents a 50% retracement from those May highs to the July lows. Now moving over to the soybean market, testing towards the top end of resistance, 915 3/4 and 923 1/2 is the pocket that the bulls want to close out above. This represents a key Fibonacci retracement on the year, but also that 923 1/2 was the June lows of last year. So previous support now becomes resistance. If the bulls can chew through here, I think that encourages additional short covering from the funds and could potentially accelerate us towards that psychologically significant 950 level. On the bottom side of support, 981 3/4 is the level the bulls must defend. A break and close back below here puts the bears back in the driver's seat. Now moving over to the wheat, it's been a lot of talk about hot and dry weather in the Black Sea, Australia, and Europe, and concerns over crop production. We think ultimately this fear will subside, and it looks like price is telling that. We're running out of bullish headlines to continue to prop this market up, and I think ultimately represents a good selling opportunity. We're pivoting right around 570. If we get a conviction close below here, I think that opens the door towards long liquidation, and we could see a run back towards 542. Now, with that said, you're going to want to manage risk appropriately. A breakout above resistance opens the door towards the $6 level. So that's what we're looking at to wrap up the week. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.